Hi traders, it's Roberto. This is lesson 2 of the price action video series. This is a live trade tutorial. I had taken several trades. It is Sunday night. The Asian markets had just opened. So I wanted to just briefly go over why the US dollar is gaining strength. On Friday, this is Forex Factory. This is where I get my news reports. Notice that the non-farm payroll numbers were positive, and the unemployment rate was also positive. So what happened is that the U.S. dollar rallied. So the euro dollar went up, the pound, or rather, the euro dollar went down. The pound USD also sold off, and this also affects gold. So whenever there's positive news events, then you should expect to see gold sell off. So again, non-farm payroll numbers were positive, unemployment rate was positive. Really good day for the U.S. economy, which causes gold to sell off, and it continues to sell off today. Okay, so I just wanted to bring that up beginning of this video, so you'll know that there's direct correlation between gold selling off or rally depending on what's happening in the US economy. Alright, so let's start with how to take these trades. Always looking for support and resistance levels, okay, because they can tell us if we should be buying or selling at any given time. And in this trade, notice that we have all the support level on euro dollar. We had several support levels back from last Friday. And notice what's happening right now. Body of the candles on this 8-hour chart is breaking below. So we look to sell. Let's switch to the 4-hour chart and notice that the body of the candle. Now, if the body of this candle closes below this level of support, then euro dollar should continue to sell off. Very important to understand that, because this is all about support and resistance. And we had a strong support for an entire week last week, and now what's happening? It's breaking that level of support and heading south. Now, if this candle does not close below this level and turns into a wick, that will be a false break, and we should be looking to buy. Okay. And that's what happened here. Look at all the times, every time price tried to break a support, the body of the candle closed above the support and turned around and went north. Okay. So, but right now everything is pointing south. So I am short on these pairs, and hopefully they will continue. All right, so let me go over a few trading strategies just using candlestick patterns. So I'm just going to pull this down. And again, using the Smart Trader platform, which will give me these candlestick reversal patterns, I don't have to guess anymore if these candles are bearish and bullish. So we have bearish engulfing, bearish shooting star, bearish shooting evening star, bearish dark cloud, bearish engulfing, bearish tweezer tops, and then bullish morning star, bullish piercing, bullish shooting star, bullish engulfing, and bullish tweezer bottoms. So these are major candlestick patterns that Smart Trader will let me know. For example, here we have a bearish evening star. We have 3 candle pattern. That is a reversal candlestick patterns. And again, if you remember from the first video, we needed stochastics to be overbought. And there's our trade. We take it on this candle, 71 pips to the downside. Find support, exit the trade, wait for the market to retrace, start looking for selling opportunities again because we are in a downtrend, and there's another trade. And again, I'm always practicing going back in history and trying to find these trades. So we have this bullish piercing line, and I have to qualify the trade. Stochastic is oversold. I count the number of pips from the swing high to the swing low. That's 339 pips. I'm also going to add a Fibonacci tool because I need to know how far I can stay in this trade before it turns around and heads south. So here are resistance levels. So this trade that I took here broke the 23% retracement level, went all the way, look, all the way up to 61% retracement level. That's where I would have loved to gotten out of that trade because that's the most popular Fibonacci level. Okay, and so if we took that trade, that would have been 210 pips. Now, we're in a downtrend. Okay, so this is a retracement trade. So I'm looking to sell at the top at a Fibonacci level. Okay, so this would be, I bought it down here and exited the trade. Now I'm looking to sell because I need to. We're in a downtrend, so I sell up here, and my first target would be the support down here. And that's where price went to, all the way down to the support. So I bought it here and made 153 pips to the upside. And then I shorted it at the 61% retracement level and exited down here at, so it's about 500 pips, 2 trades, and that was Monday through Thursday. So 4 days, 500 pips. Okay, just being able to recognize using candlestick patterns and Fibonacci levels, where to get in to buy, where to get out to exit my trade, and where to sell again based on the 61% retracement level. Again, here's the swing high, here's the swing low. And then notice that stochastics is overbought. Okay? And what I love to do is just go back in history, see how many trade setups I can find just using candlestick patterns. Notice that here we had a nice sell-off, right? And market put in 170 pips. There's my buy signal because this is a reversal candlestick pattern. And stochastics is oversold. But because we're in a downtrend, I'm not interested in staying in this trade for a very long time. So I exit at the top. Okay. And I will go over strategies on how to exit. But I take this trade, and I notice that it comes back down, but it does not break the support. In fact, it recovers and gives us a bullish engulfing candle. So I'm saying, okay, this thing is no longer in a downtrend. So I take my Fibonacci tool from the swing high, I'm sorry, wrong tool, from the swing low to the swing high. Let me see if I can do this again. Fibonacci. Swing low to the swing high, right? There's the pullback at 61%, giving me a reversal candlestick pattern. That's my buy signal. And my target is the extension. I know I'm getting a little bit ahead because we haven't discussed Fibonacci and Fibonacci levels, but I remember I talked about overlapping, going back and forth in the lessons. So here we have what is called an A, B, C level. Just remove all that and start all over. A, B, C, and D. And then I take my Fibonacci tool from the swing low to swing high, and my target is up here. Even though it continued to rally, we don't care about that. That's our target. Okay, so if we entered here and got out here. That's 176 pips. This is the language of Forex. Understanding that the markets always, when they're trending, they're always moving in an A, B, C, D pattern. So the candlestick patterns will help us identify when it pulls back and when it sells off. Okay. There was a good trade set up on pound yen last week. Let me just show you how A, B, C, D patterns. Notice how we're in a downtrend. So sells off, rally, sells off, rally, sells off, right? We went over this yesterday. And all I had to do is take my Fibonacci tool from the swing high to the swing low. And that's my entry, 61%. And my target is the extension, okay? So we can predict where the market is going to stop. And we can also predict where the price is going, where market is going to stop. And then we do it all over again. We take that swing high, Fibonacci, enter the swing low, and then we enter the trade at 61% and look where a target, almost to the pip, 161 extension. Okay, so that is lesson 2 on price action, Fibonacci. I'll go more into detail, but again, I wanted to just emphasize and make everyone understand that when we have economic news events, and in this case, on Friday, the unemployment rate was positive. It went down. And non-farm payroll numbers, the numbers went up for about 100 and about 70,000 jobs, new jobs were created. So 943, the projection was 870, and it was higher than the projected. So that's USD positive. And that's why the euro dollar continues to sell off. The pound dollar also continues to sell off. And the USD Swiss continues to rally. So when we have this, having this understanding, this knowledge that the U.S. dollar is strong based on non-farm payroll numbers, then these trades, the U.S. dollar could continue to rally for days, maybe weeks at a time. But if you don't have the understanding that the U.S. dollar strength based on economic news is causing the currency and directly affecting the currency market, it's very difficult to trade. Okay, so the next lesson will go more in detail, and tomorrow is we have a trade room at 8 a.m. If you did purchase the price action video, you are invited for an entire month to attend our live trade room. Starts at 8:30 to 11, a lot of breaks in between, and we go over strategies and call out signals. See everyone tomorrow.